Now, Nigeria's trade surplus grew by 340.88% quarter to quarter to 7.55 trillion naira in the first quarter of 2026 from 1.7 trillion naira in Q4 2025. Now, the NBS cited a decline in petroleum products imports and increased crude oil exports as reasons for the increase in trade surplus during the review period. Now, the report also shows a year-on-year increase of 89% compared to 3.5 trillion naira recorded in Q1 2025. Our RISE business analyst, Chika Mbonu, joins me now to discuss this further. Good morning, Mr. Chika. It's great to see you again.
How are you too?
Very well, thank you.
Good morning.
Yes, what should we know about this? Lots of details.
A little data pushing around. You put out that already. So let me do a little of education this morning. The export figure came in at 21.27, and the import figure came in at 13.62. Now, the two figures add up together to what the figure they call total merchandise, trade, which came to about 35 trillion. And the difference between the two is either trade surplus or trade deficit. In this time around, trade surplus of about 7.55 trillion. Now, made up of, exports of 60.85, and the total trade and import made up of 39.15. Now, as I was, trying to prepare for this story, somebody just told me, the Nigerian lingo, statistics will go chop, I'm going to eat statistics, how do statistics put food on our table and, create employment for us and so on and so forth. Yeah. Because, Nigeria's, this period has had to celebrate so many excellent macro figures. GDP is growing, inflation is, even coming down before what's, started going up again. Reserves are going higher, deficits are reducing. So, but those are all macro, at the macro level. So somebody will ask, Chika, all these figures you're, throwing at us, including now, another one now, with trade surplus, how does it help us? But before I even look at that, because that's a question a lot of people ask me, they meet me at the airport, all these good figures, but we're still struggling. Why is that happening? Let me look at one or two things that come out from this report that we put down here, that Nigeria had a positive trade surplus of about 7.55 trillion. Basically, it's saying that Nigeria, to lay language, Nigeria is sold more goods to the world than import from the world. That's basically what this, So this is positive for us, the country, because it means we conserve foreign exchange. It means also that our reserves can go up and the naira is stable, and also there's an external confidence in our currency. But there's some messages that stick out, from this, absolute figure that we're talking about now. Some messages stick out that have been consistently bothering Nigeria. The surplus is strong, but it's still very oil heavy. It's still very dependent on oil. Exports dominated. We are dominated by mineral products by about almost 86%. So 86% of the exports of Nigeria, is still oil, mineral products. And that's where the problem is. So you find at the GDP level that oil contributes very little to our GDP. Agriculture is very high in the GDP, but agricultural exports are very low compared to that. So this is one of the major negatives of this, if I may call it that, the surplus figure, or positive. So that this means that crude oil and petroleum products still carry the Nigerian export story. So the good news, oil exports have improved, but bad news, Nigeria is still dependent on oil, despite the good news. The other thing again that came out from this is that the imports fell. The first reason imports fell, now we'll celebrate that, is because of local refining. One of the largest, if not the largest, consumer of our foreign exchange before in the past has been importation of, petroleum products, whether it's AGU, whether it's petrol, and so on and so forth. But with the coming on stream of the Dangote refinery, Kwananam again, that has reduced the importation, and that has reduced our imports. So that's one leg, positive leg. But if imports are falling, because of businesses and households cannot afford the imported inputs, it becomes a warning sign. So the fact that we had a trade surplus, exports went up, and of course imports went down, you can say, yes, that's very good. Yeah. But if it is the fact that imports fell, because import manufacturers and so on, and those who import for machinery cannot afford it, that means it's a negative for us. But here, one of the major reasons is the fact that substantially Nigeria has stopped importing petroleum products. So that reduced our imports. So Nigeria, but negative here. The other negative is that Nigeria still imports too much machinery, equipment, fuel, chemicals, and industrial inputs. This accounted for about 36%, 37% of the imports that we had, all this equipment. And the minerals were about 2.65 trillion. So Nigeria is still dependent on foreign production capacity. So we don't produce our machines. A lot of raw materials we need in refineries, industries, we don't produce them. We still import them, which is again doesn't look very good. The other thing that's here is China remains Nigerian imports source. And again, this is important for the political side, the diplomatic side. Import from China were about 38% of the whole import came from China, then followed by US. So agric is a mixed picture. We thought, remember that's what I said before, that agric contributes a lot to our GDP, but on the export basis, they contribute very little. Agricultural export was just a paltry 1.17 trillion, and it was down about 32%, led by cocoa. At the time in Nigeria, remember, at least if you didn't experience it, you read it in history, at the time, Nigerian economy was driven by cocoa exports, palm oil exports, and cotton exports. But now, we barely mention this. Sesame seeds, soybeans, and cashew also contribute there, but very, very little. So Nigeria is earning more foreign exchange from exports. The trade surplus supports our reserves, which is good. And then investors are confident because the Naira is stable. But he also suggests for us that local refining is growing. So that's very important to us. But the negative I want to move to, Abby, in 1 or 2 minutes, is that the result does not automatically mean Nigerians are living better. And this is what the question they ask me everywhere I go. A country can have trade surplus while ordinary citizens are still hungry. They're hungry, unemployed, underpaid, and under pressure, which is the case with our country here now. So the report is still very oil dependent, as I said before. And so the global, say in Nigerian economy, if the oil, sneezes, Nigeria catches cold. So this trade surplus can actually disappear if there's a problem with oil prices or oil production, And imports, as I said before, falling is not always very good because of the fact that it might actually be that ordinary Nigerians are not able to afford it. So I started by asking that people are telling me, is it the statistics that we're going to feed us? And that's where the challenge is. Questions people are asking, how does the 7.55 trillion surplus, reduce my transport fare, food price, school fees, rent, hospital bills, generator costs, and so on and so forth? And that's the issue for the managers of our economy to be able to address.
All right, very data heavy, as you mentioned. And thank you so much, Mr. Chika, for this very robust analysis. I guess, on the one hand, as you highlighted, the positives are there, but we cannot ignore the stark realities that also attached to that. On the one hand, yes, it's great to see in terms of a refining capacity and the returns from that. But of course, you're talking about the trickle down effect. At the end of the day, how does this affect the man on the streets? And of course, a very strong need to diversify. This is a conversation that needs to, get accelerated ultimately. Well, let's keep our eyes peeled as always. I want to thank you, Mr. Chika, for joining us. We've come to the end of this, so we'll see you again tomorrow, hopefully.
Thank you.
All right.